All right, so clearly we're seeing some very negative sentiment. Do you think this is all related to some of the credit issues we're seeing here in the U.S., or is there something else putting pressure on the markets?
Frank, when we got to October, we thought there'd be some sort of event, a catalyst to have a pullback here. I think we've seen it break in the credit market. I think our European analyst is exactly right. We've had great news coming from the banks the last few days. We have allowance for loan losses. Provisionings have been very, very conservative. So, the fact that we have something come out, I don't see a systemic following through with the banks. I think if we get a pullback here as we grind higher in October, I think that's an opportunity for investors. We're keeping an eye on three things, Frank. I think that's important. One, home building stocks. We need a catalyst to get those going. I think with lower rates coming down from here, that may be a good signal. Gold and Bitcoin. And in the European banks. If we get a sell-off there, I think this is opportunity for investors.
All right. So just to be clear, you see this dip as buyable, but specifically about the regional banks, I'm mindful that you do work at a regional bank. Do some of these issues change the investability of that sector? We were hitting this earlier this week, the outperformance of the big banks compared to the regional banks.
Yeah, I think the regional banks have been improved asset quality. They've been very conservative, I think, in the provisioning thus far. I think we'll continue to see some consolidation taking place. What we need is the yield curve to continue to steepen. I think, Frank, the key is to get mortgage rates down. If this is the catalyst to do that, we can have a cut, perhaps bigger than the 25 basis points that's baked into the market. That will be a good signal for folks to then invest in credit in markets like the regional banks.
All right, Eric, please stand by for a second. We want to hit on one other area of the market that's under some pressure this morning. That's technology. We want to go to our Arjun Gopal live in London. Arjun, good morning. I'm just looking at some of the charts right now. I'm seeing NVIDIA down about 2%, Apple down almost 1%. What's going on with tech?
Yeah, look, there's three big topics here in tech this morning, Frank. Firstly, if you look at the market, it's really interesting. Companies like NVIDIA, Apple, the Mag 7 really aren't as down as much as some of the other parts of the market as some of the valuation concerns continue to linger. If you look at NVIDIA, Apple, Microsoft versus some of the big losers this morning, you got Intel, which is down quite significantly, AMD, ARM as well. So those chip stocks really in focus. And if you look at what's happened with those three stocks, they're trading on quite high valuations versus some of their peers, and they've already had a huge rally this year. And so I think there's a little bit of profit taking here as some of those tech valuation concerns come into focus as well. The third big topic here really is crypto. We've seen over the past few days since Friday, that big liquidation event, crypto has been under pressure a lot, and that is hitting companies like Strategy as well with that stock down. Of course, they're holding a lot of Bitcoin and often trade in line with how the crypto markets are doing. So there's a confluence of factors here. Big tech slightly more insulated than some of these big firms like the chip companies that have had huge rallies this year, Frank.
Arjun, we're seeing a lot of red on this board from crypto to technology. Thank you very much. Arjun Gopal live in London. Good to see you. All right, Eric Teal, we're going to come back over to you right now. Arjun mentioned something that our Steve Sedgwick also mentioned, valuations. Steve mentioned defense names losing some of their valuation support. Arjun mentioned some of the elevated valuations, some of those tech names leading to some profit taking in the tech sector. Is that part of what's going on right now? Some of the rockiness that we've seen in the markets, that investors are starting to get more concerned about these valuations, considering some of these macro issues, government shutdown, U.S.-China trade tensions, et cetera. All right, I believe we're having some audio issues with Eric right now. We're going to try to resolve them. Eric, can you hear me now?
I can hear you.
Okay.
Yep.
I want to ask you that same question again. Are we starting to see investors, I guess, the figure of speech is, get religion when it comes to valuations, whether it be the tech sector here in the U.S. or the defense sector over there in Europe?
I think so, Frank. You're getting valuations getting extremely stretched here. 30 times earnings in tech is right for a pullback right now. I think investors should focus on those tech companies that have reasonable valuations. The cash flow is strong to support it. However, they're priced for perfection at this point. So paying attention to quality valuation, those are the themes in this pullback that you want to focus on. We look at companies that have much more attractive valuations. That's where the opportunity is going to be. And so getting some multiple contraction at this point, despite the strong free cash flow, I think is expected.